If you were born before 1960, there is one Social Security task that could have a direct impact on the size of your monthly check, and many people never do it. They spend years working, paying into Social Security, and assuming everything in their record is correct. Then they file for benefits or start receiving payments, only to discover that some of their earnings were never properly recorded. The problem is that Social Security calculates your benefits based largely on your lifetime earnings history. If earnings are missing, reported incorrectly, or assigned to the wrong person, your monthly benefit can be lower than it should be. And once those lower payments begin, the financial impact can continue for years or even decades. Most people focus on when to claim benefits. They focus on retirement age, cost of living adjustments, and monthly payment estimates. But many seniors overlook something even more basic. They never verify that the earnings record Social Security is using is actually accurate. That is why this matters so much right now. If you were born before 1960 and are approaching retirement, already receiving benefits, or planning to claim soon, checking your earnings record could uncover errors that affect your money. In some cases, correcting those errors can increase future benefits. In other situations, it can even lead to adjustments in benefits already being paid. Many people assume mistakes are rare. The truth is that errors can happen for several reasons. Employers can make reporting mistakes. Names and Social Security numbers can be mismatched. Self-employed workers can experience reporting problems. Tax records can contain errors. Even small discrepancies can have consequences that add up over time. To understand why this is so important, it helps to know how Social Security calculates benefits. Your retirement benefit is based on your highest earning years over your working lifetime. Social Security reviews your earnings history and uses a formula to determine your monthly benefit amount. The more accurately your earnings are recorded, the more accurate your benefit calculation will be. Now imagine that several years of earnings are missing from your record. Perhaps you worked a part-time job for a few years. Maybe you changed employers frequently. Maybe you were self-employed for a period of time. If those earnings do not appear correctly, Social Security may calculate your benefit using lower earnings than you actually had. Many seniors are surprised when they realize that a missing year does not simply affect one year's income. It can influence the entire calculation. That means one reporting error may reduce monthly benefits for the rest of your retirement. Let's look at a simple example. Suppose someone earned $45,000 during a particular year, but that year's wages never appeared correctly in the Social Security record. When benefits are calculated, that missing income could be replaced by a lower amount or even zero earnings for that year. The result may not seem dramatic at first glance. Perhaps the monthly benefit is reduced by only a small amount. But if that reduction continues every month for 20 or 30 years, the total loss can become substantial. This is where many people make a costly mistake. They assume that because the difference appears small today, it is not worth investigating. What they do not realize is that every monthly dollar matters when it continues over an entire retirement. Another issue involves employer reporting errors. Most workers assume that once their paycheck taxes are withheld, everything is automatically reported correctly. Usually that is true. But not always. Sometimes employers submit incorrect information. Sometimes records are entered under an incorrect Social Security number. Sometimes payroll systems experience errors. Occasionally, wages may not be properly credited. Even if the mistake happened years ago, it can still affect your record today. This is especially important for people who worked multiple jobs over their careers. The more employers you had, the more opportunities there were for reporting errors to occur. Many seniors spent decades changing companies, moving between states, working temporary jobs, or taking seasonal positions. Every one of those employment periods created earnings records that needed to be reported accurately. Most people never review those records until retirement is close. By then, they are often shocked to discover missing information. Self-employed workers face another set of challenges. If you were self-employed at any point in your career, your earnings record deserves particularly close attention. Unlike traditional employees whose wages are reported through employers, self-employed individuals rely heavily on tax filings to establish their earnings history. If tax returns were incomplete, filed incorrectly, amended later, or contained reporting errors, those issues can affect Social Security records. Some people operated small businesses decades ago and barely remember the details today. Others worked as independent contractors before gig work became common. Many assumed everything was processed correctly because taxes were filed. But assumptions can be expensive. This is one reason financial experts often encourage workers to review their Social Security earnings records periodically throughout their careers, instead of waiting until retirement. Unfortunately, many people do not learn about this until they are already approaching retirement age. There is another category of mistakes that almost nobody talks about. Name changes. If your name changed because of marriage, divorce, or another legal reason, it is important that Social Security records match correctly. When records do not align properly, earnings can sometimes become harder to track. While systems today are generally much more sophisticated than in the past, older records can still create complications. This is one reason why reviewing your earnings history line by line can be so valuable. Many seniors assume their records are perfect because they never received any notification about a problem. But Social Security generally relies on the information it has received. If an error exists and no one identifies it, the mistake may remain in the record. The good news is that checking your earnings history is usually straightforward. You can review your Social Security earnings record and compare it against your own documentation. What should you look for? Start with years that appear unusually low. If you remember working full-time during a particular year, but the earnings listed seem far below what you earned, that deserves attention. Look for years showing no earnings when you know you worked. Look for large gaps in employment history that do not make sense. Look for periods when you worked multiple jobs but only one set of wages appears to be reflected. Pay special attention to years when you changed employers, relocated, started a business, or worked under different employment arrangements. Those transitions are often where discrepancies are more likely to appear. Now let's talk about documentation. If you find a possible error, evidence becomes extremely important. Many people immediately worry because they do not have every employment record from decades ago. While that can be challenging, there are several types of documents that may help support a correction request. W-2 forms are among the most valuable records. These forms show wages earned and taxes paid during a specific year. If a W-2 demonstrates earnings that are missing from your Social Security record, it may help establish the correct information. Tax returns can also be important. Federal tax filings often provide evidence of income that was reported during a particular year. For self-employed workers, tax returns may be especially valuable. Payroll records can help as well. Pay stubs, earning statements, and employer payroll documents may provide additional support. Some individuals still maintain employment records from prior employers. Others may be able to obtain documentation from former companies if records remain available. Employer verification letters can sometimes be useful too. The key point is that documentation strengthens your ability to demonstrate what your actual earnings were during the years in question. Many seniors make another mistake at this stage. They find a discrepancy, but they delay taking action. They assume they will deal with it later. They put the records aside and move on. Months pass, sometimes years pass. Meanwhile, the issue remains unresolved. The sooner potential errors are identified, the easier they often are to address. Records can become harder to locate as time passes. Former employers may close, payroll systems may change, documentation can disappear. That is why many retirement advisors encourage workers to review earnings records before they file for benefits whenever possible. But what if you are already receiving Social Security? This is where many viewers become curious. A common misconception is that once benefits begin, nothing can be changed. That is not always true. If a legitimate earnings record error is discovered and corrected, it may affect benefit calculations. Every situation is unique, and outcomes depend on specific facts and documentation. But the important point is that being already retired does not automatically mean you should ignore your earnings record. Many current beneficiaries never review their detailed earnings history because they assume the calculations were automatically correct. Most of the time they may be. But when errors exist, identifying them can make a meaningful difference. Another overlooked issue involves years that seem only slightly inaccurate. People often focus on major missing earnings and overlook smaller discrepancies. That can be a mistake. Imagine several years where earnings are understated by a few $1,000s each year. No single year seems dramatic. Yet when multiple years are involved, the cumulative effect can become much larger than expected. Small inaccuracies can compound over time. This is particularly true because Social Security benefits are designed to continue throughout retirement. A modest increase in the monthly payment can translate into thousands of dollars over many years. That is why reviewing details matters. Many seniors spend hours researching investment opportunities that might improve retirement income by a small amount. Yet they never spend a few minutes verifying the earnings record that directly affects their guaranteed monthly benefit. This hidden opportunity often receives far less attention than it deserves. There is also a psychological reason many people avoid checking. They assume nothing can be done. They assume government records must be accurate. They assume errors would have been detected automatically. Unfortunately, those assumptions are not always correct. Records are created from information that is reported. If incorrect information enters the system, the error may remain until someone identifies it. That someone is often the worker whose earnings history is involved. Think about your own career. How many employers did you have? How many times did you move? Did you ever work part-time jobs while holding another position? Were you self-employed? Did you operate a side business? Did your name change? Did you file amended tax returns? Each of these situations creates additional opportunities for reporting problems. That does not mean errors exist, but it does mean verification is worthwhile. Many people are surprised by how much peace of mind comes from reviewing their record and confirming everything is accurate. Even if no discrepancies are found, you gain confidence that your benefits are being calculated using the correct information. And if an issue is discovered, you have an opportunity to address it. Another important point is organization. If you still have old tax returns, W-2 forms, payroll records, or employment documentation, keep them organized. Many retirees gradually discard records over time because they assume they will never need them again. But employment records can become valuable if questions arise about earnings history. Even if you believe your record is accurate, maintaining important documents can provide protection should any issue emerge later. For those approaching retirement, this review should become part of your retirement preparation checklist. People often focus on savings accounts, pensions, Medicare enrollment, and retirement budgets. Those are all important. But verifying your Social Security earnings record deserves a place on that list as well. After all, your Social Security benefit may represent one of the largest sources of guaranteed retirement income you will receive. A small increase in a monthly check may not sound significant at first, but over 10, 20, or 30 years, even modest adjustments can add up. That is why overlooking this issue can be costly. And this is why many seniors who discover errors wish they had checked sooner. The encouraging news is that you do not need to be an expert in Social Security formulas to benefit from this review. You do not need to calculate your own retirement benefit. You do not need advanced financial knowledge. You simply need to verify that the earnings history being used is complete and accurate. That single step can help protect the benefits you earned through years of work. As retirement approaches, every source of income matters, every dollar matters, and every verified earnings record matters. The most important takeaway is simple. If you were born before 1960, do not assume your earnings record is correct just because you have never noticed a problem. Review it carefully. Look for missing years, unusually low earnings, reporting discrepancies, self-employment issues, and gaps that do not match your work history. If you identify a potential error, gather supporting documents such as W-2 forms, tax returns, payroll records, and employer documentation. Keep copies of everything. Take action promptly rather than waiting. Even small corrections can make a meaningful difference over the course of retirement. Your Social Security benefit is based on the earnings record attached to your name. Making sure that record is accurate may be one of the most important